Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, December the 23rd, the year's 2020. Let's talk trading. A reminder to keep it simple, part two. And part of keeping it simple is just remembering these videos are for educational purposes only, and your results may differ from mine. Um, it's the thing about keeping it simple is something that just can't be stressed enough. I was listening to a Tim Ferriss video, and he said something about complexity is problems, or how you should just keep things simple. And he wasn't talking about trading; he was talking about business and life in general. Um, but it just seems that humans have a tendency to want to complicate things. In fact, my favorite author, Robert Ringer, has his life complication theory. And I'm sure I've done a video on that, so I won't go on and on about it. But why people can't keep things simple, it's just really amazing. In fact, let's see here. Let me find the chart that I want to talk about because let's see, where is it? So many charts here. Here we go. Inside bar. Somebody was asking me to further explain about the inside bar. Um, and how do you know? Well, number one, you don't know. Price comes to this line, it's either gonna break it or come back and bounce off of it. Retrace from it, return from it. I don't know. But I do know, you know, based on evidence that this does happen. I mean, we can see it. There was let's see, where was it? There was another inside bar here, and you can see right here it broke to the top, and then the next day it broke to the bottom, and then the day after that it broke to the top, and then broke to the bottom, and the day after that it broke to the top. And then somebody said, well, why not an outside bar? Well, you could do outside bars. I mean, right here you've got this bar, and an inside bar makes this an outside bar, and then here it broke the top here. But I mean, you could then just keep stacking things on. Now keep it simple. Inside bar. One thing, you can pick your time frame or time frames. And here we're looking at the daily chart. So we'll also look at the weekly breakout and the monthly breakout. And you can see here, if we scrunch the chart, we had this weekly inside bar back here, and it broke it here, it broke it here. And then the monthly inside bar, you can see it broke it here and broke it again and then broke it again. I mean, you don't get these trades every day, but it's one of the things when they happen, more times than not, you can make some pips off of it. And, I really shouldn't have to tell you this, but I'm going to anyway, just because, in every trade, you have to have your stop loss in place so you don't lose any more than you're willing to lose. Because when we look at these trades, we don't know if they're going to be winners or losers. Based on statistics, we might think it's going to be a winner, but the statistics don't say 100%. They just don't. I mean, I could say, well, you know, will the price break out of the opening range for the week? Well, I mean, if you would ask me that yesterday and price closing here, probably say, I don't think, man, look at the range. It was like 300 pips on that day. It's like, it wouldn't have surprised me if price stayed in, but look what happened today. So you can think all you want, but you don't need to think. You can just say, if price hits that upper limit, I'll go long. And so rather than wait for price to hit here, you could have easily said, well, you know what? Daily breakouts, either to the high or low or both sides, I'll take a chance on that trade. I'll take a chance. I'll make some pips. I mean, and if you look back, if you look at this horizontal line here, I put it right here. Well, look, it just seems like it happened, just happened last week, right? Pretty much that same location, price shot up. So that's why, Walmart and I, sometimes you'll hear us talk about look to the left, look to the left. What do you see? Well, so you don't have to make trading complicated. You just really don't. You don't need more indicators. Oh man, the questions I get about indicators and can you make it do this and make it do that? It's like sometimes I can and sometimes I can't, but just because I can doesn't mean I will, or it doesn't mean I should. Okay, for the right now price is 263 pips over that yearly open. You see it's 40 pips above that inside bar high, which was yesterday. There was a chance to make over 100 pips on that breakout. On the and right here you can see daily open from yesterday, that little wick zone there, range over 200 pips today. I was talking with Walmart earlier. He's like, it's like, why is the market doing that? And he likes to know the why, but when you're trading, you don't want to know the why because that will bias you. All you want to do is see what market's doing and act accordingly at those levels. So, right here, we know we've been talking about pivots, and somebody's asking about these indicators. This pivot point is out of TRO HL5, which you can get over at Crestlick in the mother lode. And in fact, I even think it might have its own thread over there because I've updated it a few times and it's, kind of become a Swiss Army knife kind of indicator. I've built so much stuff into it. It started out in life really simple, but I've added some more simple things to it. I didn't really complicate it. I just made it plot more horizontal lines. Rats. Rats, once again, if you're having trouble with the rat zone, you see here in the beginning of the day, this wouldn't have been a good trade, but you see right here, it would have gone against the H1 candle color if you got short there. A 231 pip range. It was, price is probably going to do something. You just don't know what. So, it's going to probably retrace off that high, and it did by 61 pips right now. So if you had taken one of these opportunities, at the 35.50, which is a psychological, another simple trade, you can see you'd be up a few pips. You'd be up about 40 pips right now. And the thing is about these simple trades or simple methods, sometimes you can stack them on. For example, if you've got a holo inside the wick zone, that's a really nice trade. Once again, taking out that pivot. Oh, and this pivot indicator is the SDK pivots that I modified. So you can pick that up over at Crestlick. And these indicators, the missed pivots plot, you can put those up. Crestlick. Now, anything that has TRO and the year, those are donationals. And you know how to get the donationals. And if you don't, you can go to my Facebook page and it tells you there, or at crestlick.com. They have each year has its a donational thread. And let's just see here for the week. We hit the pivot. For the month, we haven't missed the pivot since 2018 on the monthlies. Wick zone in and out here and right through it, back again and then up through it. Simple, one of the simple trading charts here. We got the 3-level ZZ, the Walmart lines, previous H1 high low. Nothing too complicated. You know, the gauges just tell you the range, and the multimeters, candle color, whether or not prices above or below the previous midpoint, the wick zone, you know, where is price? Is it in the wick zone? Higher high, lower lows. Is it making them? So you can see here on the M5, that candle made a higher high, but now on an open here on the 1 minute, it's making a higher high, but here on these candles, it's nothing's happening. The range on each one of the chart periods and the candle color count, which, you know, you got more green candles or red candles out of the last 4 candles. Really simple chart here. Just the sweet spots indicator with previous high-low marked for breakouts. So keeping it simple. Easy to say, but for some people, it's really difficult to do just because the nature of our brains. It's funny, I was watching another video. It was about business. And there was this guys talking about, you know, what happened to Dave Chappelle and all the things. And, you know, some things might be legal, but are they moral? Are they ethical? You know, is it right? You know, for there to be something right, something has to be wrong. You know, right can't exist in a world of only right. There has to be wrong for there to be right. There has to be right for there to be wrong. So it's easy to get caught up in some of these mental constructs. And if you think I sound like Morpheus out of the Matrix, yeah, that's right. You know, because the guys that wrote that movie, made that movie, had it right. You know, there's so many mental constructs that people mistake for reality. And, you know, what is real other than electrical impulses on the brain? That's how we sense reality. But in the world we live in right now, getting a little off the subject of trading, it's hard to know what's real and what's not. But, you know, right here, we just saw price go across that Walmart line, and I think it hit a high of 19. So it'd been easy to pick up, you know, 5, 6, 7, 8, 9 pips right there in the space of what, 2 minutes? So, and then you could see, and market just took it back. So depending on you know, what your daily goal is, maybe you grab the 9 pips, like Walmart would take 9 because he wants 10 for the day. You know, other people might think, well, maybe it's going to go 20, and now guess what? You're right back to where it opened. So that's why you got to keep it simple. You got to have a plan, a simple plan, execute that plan to perfection. And hopefully at the end of the day, week, month, you're up. And right now, if you hadn't taken that trade and you got in, you'd be underwater. So, fellow traders, I hope you have a profitable trading day today. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, come down and click subscribe and click share, click the alert. And this is the Rumpled One, over and out.